Welcome to Kaizen Time, part of the Blood, Sweat, and Business podcast, where we provide constant improvement to businesses through timely, actionable financial solutions. Do you want answers to your financial questions? Email us at bsp@kaizencpas.com. I'm your host, Mark Valesky. Now let's get started. Welcome to another episode of Kaizen Time. I'm joined by Eric Jorn, a partner here at the firm. Eric, how you been?
You know, I was trying to enjoy the 4th of July, and unfortunately, I was in the wrong profession for enjoying the 4th of July this year.
Oh, yeah? What is the profession for enjoying the 4th of July?
Well, I think there's all sorts of them, but us who work in the tax industry got hit with a whole lot of homework on the 4th of July. So instead of blowing off fireworks, I was blowing off steam reading a new bill that came out.
Oh, I heard it was pretty thick too, right?
Yeah.
A lot of good stuff in there.
Oh, it was so enjoyable digesting about 800 pages of political nonsense.
Yeah, well, I'm sure the politicians who got their hands on it whenever they did got to enjoy speed reading it or whatever they did. So what is this thing? There's apparently some good, some bad, depending on who you are. And of course, we're talking about the big, beautiful bill.
Yeah,
the triple B.
The one big, beautiful bill.
Yeah.
So, yeah, we're going to limit this to tax provisions because that's what's pertinent mostly to us.
And that's what matters to us.
And pertinent to you as business owners. And we're just going to kind of keep it to, hey, what do we think business owners should take away from this bill? Mm-hmm. From a business owner standpoint, it's a really good tax bill. I mean, theoretically, everybody will have a tax decrease from this bill itself, especially when the rates were set to sunset at the end of the year. So extending the Tax Cuts and Jobs Act from 2017, to me, is the most important provision. For our client base and for our listeners, the one provision that is so important from inside that bill was the qualified business income deduction. And I think we've talked about this before on the podcast. But that is a 20% deduction on business income that passes through to you as the shareholder or the owner of that business, shareholder, partner, or disregarded entity member.
So does that qualify for like an LLC?
An LLC, an S-corp partnership. There are exclusions. So specified service trader businesses. So apparently they don't like accountants. So accountants are excluded.
Wow.
A lot of medical practitioners, attorneys. Thankfully, at least they got the attorneys. Just kidding.
No. He actually means it. It's true. No one likes attorneys.
No. We're just having fun. Financial advisors. So there's a lot that are excluded, and this has been in practice. And I think our clients might not notice or might not understand how good of a tax climate they've lived in, because on top of that, the tax brackets have been really beneficial, especially to really, we can call it mid-tier earners. About 200 to 500K in taxable income saw a really nice tax cut when that 2017 Tax Cuts and Jobs Act bill came out.
And again, are we still talking about businesses?
That's the
business owners.
Those tax rates are everybody.
Okay.
But that combined with the qualified business income deduction was very, very beneficial to largely our client base of small business owners.
Okay.
So that getting extended, huge, and it's now permanent actually. So it's no longer. It was set to expire at the end of the year. I did a little calculation. A business that made about $300,000 in profit under the sunset rule. So if the bill would have sunset, they would have paid $35,000 more in tax.
Oh, wow.
Under that tax law. So that's a massive tax increase. I mean, that's over 10%.
I'll say over 10%.
That'd be probably your number one indirect expense on your P&L at that point in time. Just that increase, not even your tax as a whole, but that increase. And it still is really important that we highlight, like, this was very impactful to small businesses since 2017.
And I'll even say this, it's not something that was a big talking point about this bill.
Exactly.
Right? There are tons of things in this thing, don't get me wrong, but like this is an impactful thing for, again, small businesses across the board.
Yeah. We could dive into the hot topics that everybody talked about, right?
You hear about those. You hear about more. You hear that. You hear about it more than enough.
Yeah.
But
no
back to
tax on
business.
tips and no tax on overtime was probably two of the hotter topics.
which we will have covered in some future podcasts. That's already scheduled.
Okay. You guys already talked about it.
Oh yeah, we did.
Perfect. But yeah, just a high overview. It's nothing crazy, right? This is not going to be world changing. It is not, hey, we are not going to go change ourselves from salaried employees to hourly employees earning overtime to save on taxes. I think probably the most somebody's going to benefit out of that might be a couple grand a year in taxes out of either one of those programs. Mm-hmm. So really nothing crazy out there. And it's going to be hard to trick the system. They actually did a pretty good job creating some parameters. Now, all the smart attorneys and tax strategists out there are going to find their loopholes. Let's talk $2,000 benefit.
The average person out there, really, they're going to be documenting their taxes more. Right.
Yeah, exactly.
Or their tips and their overtime. It's through their company.
Yeah.
And in the end, as you said, a couple grand.
Totally. So that one was of interest. Or both of those, obviously, they were the shining stars of the tax provisions of the bill. Not super impactful for our businesses. The no tax on tips and overtime. We do like that because it will help promote employment for employees of our clients. Mm-hmm. Right. It'll help service workers who make tips, and it will help employees of probably blue collar businesses, which is our bread and butter client base. They get more money in their pocket. That's a win for our clients' employees. So it's a win for us. But you as in the business owner, see how that will affect you as in your tax world? Not really. Okay. So that was those were the big ones. One I think is pretty impactful, bonus depreciation was phasing out. So what bonus depreciation does is allows us to accelerate depreciation on investments that you make inside the business. Mm-hmm. There's bonus depreciation. There's Section 179. They both do the same thing. We can write off more. So normally with an investment, say you buy a piece of equipment, you have to depreciate that over so many years. Both bonus and Section 179 allow us to accelerate depreciation on that. But there's mixed uses for why you might use 179 or why you might use bonus. And that's probably a podcast episode in itself and one to use each. The most important thing is that bonus depreciation is a tool that we use, and it went from phasing out and sunsetting to now being back into service. So
sounds great.
100%. It's very important.
Why do I feel like I have this image of, you seeing that and you're just like clapping. You're like, yes, love that. Again, right. The extension of the Tax Cuts and Jobs Act was kind of our, that was our big rah happy moment. So actually, I'm just going to ask you right now, as an accountant, what is your favorite thing that was put in the big, beautiful bill?
Yeah, it is the Tax Cuts and Jobs Act made permanent, because it is the one part of that bill that truly helps our clientele, our small business owners. And it also helps us not have to relearn a whole new entire tax code.
So what are some other interesting provisions in this big, beautiful bill?
Provisions, that's a big word.
It is a big word.
Changes to the SALT cap.
Salt.
Like
the mineral?
State and local tax, also known as SALT. So back with the Tax Cuts and Jobs Act, one of the provisions said that when you itemize your deductions on Schedule A, that usually included things like mortgage interest, state taxes, charitable donations, and we called them other miscellaneous deductions and medical expenses. They actually limited the tax part of that to $10,000. That was a big effect on high tax states like Illinois, California, New York. We found workarounds around it for our small business owner clients, where we use things called pass-through entity taxation. We've done a podcast, I think, on that as well. But now they've raised that SALT cap, state and local tax cap, to $40,000. that makes things a little bit more interesting. There might be cases where we don't do pass-through entity tax, and we might utilize the SALT deduction with that new cap. But they did also introduce some major income limits in taking itemized deductions. So it's going to be an interesting formula to figure out, what truly maximizes the benefit for a taxpayer. And especially when you're a small business owner and you have those levers of, I can take pass-through entity tax, or I could take now a Schedule A deduction. It actually takes some strategic planning to come up with the best case scenario. You can't just say, oh yeah, we're going to blanket do this. And we've kind of dealt with that through those pass-through entity tax programs. So it's totally normal, but it definitely creates some new options out there.
Okay. Anything else in there that we should go over?
Oh, there's, I got all these pages right here, and these are just basic notes. We like this one. It creates a lot of administrative savings. So they changed so subcontractors we used to have to issue you a 1099 if you made over $600. Yep. They raised that limit to $2,000.
Oh, that's huge.
It is, because especially like the person that you pay $610 to is generally the person that you forgot to get the W-9 and your COI and all those things. And then we're at the end of the year and you say, hey, we got to go get this. You call them, they ghost you. It creates a whole administrative nightmare. Oh, on top of that, we have to file 1099 NECs by January 31st. And it's really a very painful administrative process. Raising that limit to $2,000 kind of gets those we'll call them non-recurring contractors, one-time use contractors out of the queue. And hopefully we can focus more on getting into compliance with those regular recurring contractors that we might use. So, that relieves some stress off our plate, off our client's plate.
And
that's
it really
a nice
wasn't
win-win.
much of it's not a financial burden.
Are we
that specific group?
The $1,400, and it's been $600 as long as I know. And, obviously inflation's been
going this whole time.
Crazy. It's probably honestly from the rate when they set it at $600 to today, that is probably the inflationary change of that. So maybe it's just a true up to what it should have been all along, but it's going to help us not deal with some administrative nightmares.
And then Eric, kind of as we wrap this all up, when does this all start coming into account? when does the big, beautiful bills, I want to say ramifications, but when do we start seeing the results of it? When does it start affecting us?
It's a spider web. There's all sorts of different effective dates and sunset dates and termination dates on all the different provisions. So some stuff goes retroactively back to 1/1. Like I said, the most foundational part, the extension of the TCJA, there's no change in 2025. It was going to run through the end of the year. But instead of it expiring at the end of the year, it extends into next year. There are some things like EV credits that are expiring now September 30th. So some of those things maybe have been accelerated to sunset and expire, and EV credits, electronic vehicle credits. And there are things that are going to place in 2026 instead of 2025. So it is all over the place. We're going to do deep dives on the important subjects. We have them scheduled in the queue. But also we are working on a much more comprehensive written guide on all the tax changes, including a breakdown of, hey, here's just a simple summary. Here are the important figures, dates that you need to know. And then, hey, who needs to pay attention to this or have a conversation around this? And we're going to try to attach a persona to a lot of these different provisions of, hey, does this fit my profile? Let's talk about it, instead of, hey, I can give you 200 pages of bill or I could just still even all of them in technical subjects, but we really want to know, does this actually apply to me? Do I even need to spend time thinking about this?
All right. Also, when you were talking about spider webs, immediately that song by No Doubt, Spider Webs, for those old enough to know that song, that was playing.
And they're not even that old.
They are.
Ozzy Osbourne had his last show.
Yeah, he's in a wheelchair.
Yeah, it was sad. It was sad. It was cool, but sad.
And speaking of sad, now we're sadly going to end this episode. Thank you, Eric.
Thanks, Mark.
You've been listening to Kaizen Time, part of the Blood, Sweat, and Business podcast. If you like what you heard, subscribe and leave a 5-star review. This podcast has been brought to you by Kaizen CPAs Plus Advisors, providing advisory and accounting services to help you grow your business. Learn more at kaizencpas.com or email us at bsb@kaizencpas.com.